if we coulda, woulda, shoulda, maybe. All right. So, we're here and we're looking at this right now. It's Tuesday mornings after a bank holiday, etc. First and foremost, let's find out what's going on in the world. All right. Let's find out what scheduled events are going on in the world that could affect our trading. Okay, so we're going to use the economic calendar just to know what's going on today. All right, if there's any big milestone, landmark explosions happening in the world that could affect our trading. Now we can see there is some US red folder news starting from 1:15 going through to about about 1 o'clock. Durable goods stuff. I don't know whether this is going to have huge impact on our markets. However, it's something for us to know what's happening. Um, Aside from that, nothing too much in scheduled news. Now, that doesn't mean that there's nothing going on in the world. It just means from a schedule perspective, there isn't that much happening. Okay. It just means from a schedule perspective, there isn't that much going on scheduled. All right. Now, on that basis, I want to trade what I see. I want to hope I'm going to have a good day of trading, but I'm waiting for some volume to come into these markets because I want to trade with volume. I want to trade when the party's jumping. That's when I want to be on the dance floor, is when there is activity happening, when it is going off. All right. Now, when we trade London session, we understand that we're only getting London volume. Okay. No, yeah, it does something. London is still a force, and we do see some sort of movement that happens in London, but it's not the same volume that happens in the crossover, which is when New York opens and London's still open. Yeah, there we see more volume. Now, how can we identify that easily and just see what's going on? We can use an indicator to be able to just show us volume. Remember, our strategy is market structure and price action, meaning that we don't necessarily rely on indicators at all, but we do use one or two of them just to keep our eye visually to understand what's going on. For example, these colors here, we can see session indicators, just letting us know New York, Asia, London sessions. Okay. And here, like I said, you can see these spikes in volume. Yeah, you can see these spikes in volume. So though we can see a spike, happening here, these big spikes, I kind of move this out of the way, these big spikes here, um, we've got a big spike here that happened at 7 a.m. But typically these big spikes here we're seeing are happening around when US is open. That's 2:30 over here, you know. Um, let's have a look. Let's have a look. Last few days has been funny. And remember this, let's go to an hour time frame and zoom all the way out. Yeah, so if you can see here, we're talking about from 2:30, 2 o'clock. This is when we're seeing the volume. And that's going to be the case all throughout the markets. And that's showing you when New York is activated. This is the dollar index. And that's when that volume comes in the market. Okay. So whenever we see those spikes, it's ultimately we'd love to have our surfboard at a point when those spikes are spiking. Okay. But ultimately, we trade what we see. And we live in London, and you have to schedule your trading around you, your personality, and your lifestyle. Okay. Maybe you're not able to be on a London session. Maybe you're only able to be an Asia session because you work and you come home and you open up your charts late at night. But then you have to trade a different strategy. You have to trade a different way. Same strategy, but you have to trade a different way. You have to choose your markets accordingly. Now, I live in London, in the UK. I have no problem doing my trading before, from 7 o'clock in the morning and finish my trading by 10 a.m. so that I can get on with the rest of my day. You can't trade all day. It's not the more you trade, the more money you're going to make. Unfortunately, that rarely will happen. Okay. What will potentially happen is you overtrade, meaning you trade too much. And even if you've made some money, you will start eating into your profits and going backwards. So you must schedule and understand what it is you want to do. I'm sure you've got your own businesses, your own uh, hobbies, your own, maybe you got to work, etc. Meaning there's going to be a certain time frame which is ideal for you to be at the charts. You have to decide what time frame that is. For me, I think it's great for me to wake up in the morning, go to the gym, come back here at 7 o'clock, be able to trade and finish my trading ideally by like 9, 10 o'clock. Okay, or at least have everything set up so that just my alerts are watching the market by that time. Yeah. And then maybe as I'm able to be around my computer because of the type of work I do, then I can just react to my alerts. Okay. So when we're trading London in session, trading pairs that are going to move, is ideal. So I like to trade GU, I like to trade EU. Okay, I use the Dixie, which is the dollar index, to give me a baseline of this, like a single source of truth, of whereby I can say, okay, this Dixie, which is the dollar, yeah, is the driving force between my GU, in my EU. The dollar is the driving force. Yeah, not necessarily the Great British Pound, not doing too much, or not necessarily the euro. Yeah, the euro. However, I could use the BXY, which is the British Pound Index, as well as the EXY to look at just the euro. But just looking at the dollar alone gives me some sort of understanding of what I want. That dollar starts to spike up, gaining strength. My GU, my EU should be coming down because the dollar side of that equation is gaining strength, i.e., we like to compare it to getting heavier. Yeah. So if that is gaining strength and getting heavier on a scale, yeah, if it's getting heavier, then that GU, I'm trying to select both of them. I'm trying to select both of them. That U side of the GU, if it's getting heavier, we'll be doing that, and therefore our GU will be bearish. Okay, will be bearish in this direction. Yeah, same with our EU. So that's an easy, for me, an easy setup between the Dixie and the GU, giving me my resources to review, allowing me to look at if there's any divergence happening between GU and EU because they're cousins. They're very closely aligned. Okay, so I'm able to use both of them to look at which one looks the best. Okay, it gives me a host of resources and tools so I can make good decisions. And at the baseline, not the baseline, even at the top of all that, the umbrella of all of that is that I manage my risk. I manage my risk so that I'm never going to ever risk more than 1% at a time on my account. Now, someone's saying 1%, that's a little bit slow, a little bit. Look, the bottom line is this. Just because I'm risking 1%, it doesn't mean at the end of the day that I haven't taken, got large positions in. But I do this in a systematic way. I don't jump in to the puddle with my 2 feet straight. Yeah, so that when I land and the puddle is shallow, I shatter my vertebrae. Or when I land and the puddle is deep as hell, I drown. I don't need to do that. What I can do is I can put a toe in first by putting a 1% trade in, or a 0.5% trade in, or a 1/4% trade in. Then when the market starts to do what I think it's going to do, and gives me the confirmation that I can scale in a safe manner. This is very, very, very important because I know that there's people on this call right now that have blown their account because they jump in 2 feet. They jump in 2 feet into the pool, not knowing that the pool is only 1 foot deep. You're going to kill yourself. Whereas if you were smart, you'd go, I'll tell you what I'm going to do. Let me go down to the river first and let me see how deep it is with a stick. Okay, this is deep enough for me to jump in 2 feet. And then you go up to the ledge and you jump in. But the idiot, the psychopath, the guy who doesn't have no life experience and he doesn't care about his back and his vertebrae, he just dives in from the top of the cliff into 2 foot water. And before you know it, he has to wheel himself around for the rest of his days. You don't have to do that in trading. I know there is an urge, there is a FOMO, there is this thing in us humans where we just want everything now. That anxieties, we want to win now. We want Lamborghini now. We want the biggest house known to man now. I get it. But let me ask you a question. When you get those things immediately now, without the struggle, without the time, without understanding, what do you do next? What's the next hurdle for you? If life was like that, maybe suicide rates would be up even further. Maybe that lack of fulfillment, I'm telling you, it'll be there. You are supposed to take time. If your mother was able to give birth to you in a day, she conceived, and a day later you dropped out of her, she wouldn't care about you. There'd be no attachment to you. But when she has to carry you for 9 months and stretch marks and this and change her body and red tear and then deliver you with pain, yeah, with blah, blah, she knows what she's gone through to bring you into this world. And that link, that connection, that love is deep rooted, is valued. It's the same with our trading. I know we want to go and hit one trade right now, risking £1, and it goes to $1 billion. I know we do. That's not going to happen. What's going to happen is that you dedicate yourself to understanding how to do this and chip away at it. And slowly over time, you will grow your funds and understanding of the markets. Right now, there is nothing happening in the markets. The market's not moving. It's not giving me any signals for me to get involved in the trade. So I don't have to rush. Yeah, I don't have to panic right now and be, itching to click the button on a buy or a sell. I can sit here and I can talk to you guys and we can talk about mindset and we can search and I can make analogies about your mum giving birth and etc. 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 because I do not have to rush right now and panic towards these markets because I understand through my experience, through my pain points, I understand. Sorry, that's my MT5 going nuts. I understand that this is a marathon, it's not a sprint. Do not let Instagram convince you that this is a sprint. It is not a sprint. If it was a sprint, the guy on Instagram wouldn't be Instagramming. He'll be taking over a small country because everything he does, it turns into gold. Everything he touches, he can't lose. That's what he'd be doing. And I'm not trying to say that in the world, there isn't somebody out there who has a bulletproof strategy, as in like they have done very well from their strategy, and they are, or maybe they're a savant, they're a genius, and every time they look at the charts, it's just zeros and ones. Yes, possibly in the world that person does exist, but they are the exception. They are not the rule. Yeah. So therefore, you might have to do things the hard way. You might not win the lottery. You might not have rich parents. You actually might have to go out and graft and set up your own business and go through pain and this and bankruptcy and that and this and try again and lose and fail and boom and then get the big house and the big car. That might be you, opposed to, your dad was a billionaire or, you won the lottery. So let's work on that premise that we're going to have to work at this. So if we're going to have to work at this, I'm telling you, do not risk more than 1% of your account at a time. I don't care what size your account is. If your account is £1,000, that's your problem. That's not the market's problem, that you've only got £1,000 in the market. And you can't risk any more than £10 at a time. That's the rules. If you want to risk £100 at a time, put 10 grand into an account. If you'd like to risk £1,000, it's down to you. That's your business. That's on your shoulders of how big your account is. But the rules are the rules. Now I know what you're going to say. You're going to say, yeah, there's this other person and he risks 5% or 10% of the time. That's good. Good for him. What he's doing is he's jumping into the pool with 2 feet. And I'm telling you, there's going to be a couple of times he's going to make absolutely, he's going to be gnarly. Gnarly, man. Cool. He did a double backflip and landed into a river that he didn't know how deep it was. And it's going to look fantastic on Instagram in slow motion. And he's going to get all the accolades. And men are going to say, "Rah, you're so cool. You're crazy, man. Like, wow, you're so brave." But there's going to be a time he does it and he lands on his neck and all the jokes is going to stop. All the fun, all the wow, he's been amazing, he's so cool will stop because he landed on his neck. I always say to the youngsters, the Scarface movie was only over a couple years. You didn't see Scarface being the man snorting cocaine with lions and the world is and the thing. That wasn't happening for 10, 20 years. That was a quick thing. Man, no, everyone wants to be Scarface, but just know he was on top for a couple years, bro. And then he got blasted in his chest. So you got to decide who you want to be. If you want to be that person, you want to be Scarface, that's fine. Go and get your account, put 10 grand of your hard-earned money into it, and then take a position risking 5,000 of it. Go for it. Go long 5,000, as many lots as you can do in gold, just before high impact news, and maybe you turn into Scarface. Maybe. Maybe it spikes in your direction. All of a sudden, your 5 grand turns into 500 grand, and you're laughing. If you don't want to do that, and you'd like to be on top for longer than a couple of years before getting blasted in your chest with how many shotguns, this is how you do it. By coming here, understanding the markets, understanding when not to get into the markets, understanding when there's an opportunity, when there's not an opportunity, understanding that even if you miss an opportunity today, there'll be an opportunity later on. Not even tomorrow. Later on, there'll be another opportunity. It's like a bus. What's the point in killing yourself? Imagine you don't have somewhere to go on time. You don't have a specific time you've got to be somewhere. Why would you sprint like a lunatic for a bus? You don't have to be nowhere at any time. You're just going in, you're going shopping. You don't mind what time you get there. Why would you sprint like a lunatic where you might trip over the pavement? You might knock over some kid. You might knock over a mother who's pregnant because you're running like a lunatic. You're going to sweat out your shirt. You're going to look like an idiot. Why would you do that when you know there's going to be another bus in 2 minutes? I wouldn't do that. Not to say we're running for bus, but if I was running for bus, I'm just like, okay, cool, I missed that one. There's going to be another one in 4 minutes. All right, I'll just chill out here, look on my phone for a little bit, maybe take in the world. I don't know, chill out, have a conversation with the person at the bus stop for 3 minutes, and then there's going to be another bus. It's the same with the markets. But for whatever reason, we get into this scenario where we have a fear of missing out and we just want to slam in some big lot size. I know that regardless of my 10-minute conversation that I've just spoken to you about lot size and risk, somebody's going to go and take a trade for more than 1% of their account today. I know. I know that regardless of what I say, somebody's going to go take that trade, and when they do the math on it, it's 4% of their account. It's 8% of their account. It's 10%. Why? Because their £250 account is just too small at the moment. They just want to see it with 4 figures. They want to see it with 5 figures. So they're just going to say, you know what, I'm just going to risk £40. It's only £40. £40 is £40. No, bro. £40 is 20% of your account, or 15% of your account, or 10% of it, and that's too much. If you want to do that, you have to have a bigger account. Your account should have 4 grand in it. Because if your account has 4 grand in it, then you can put £40 out on a trade. And if that trade goes to a 1 to 5, you've just made £200. Fantastic. If not, then stay here in the rules. Stay in this little pocket of the rules, because once you start getting those rules and they become entrenched in what you do, then you're going to feel a lot more confident to reach into your bank account and go and take out 10 grand, 20 grand, to take investment from somebody else and say, you know what, look at my history, look at my track record. I know the account was only £1,000, but look at how I stuck to my rules, how my risk, how I was never risking this amount, and I grew that £1,000 account to £2,000. And I know what I said just doesn't sound very Instagram, doesn't sound very Hollywood, but £1,000 to £2,000 is 100% increase in your funds. You don't get 100% return on nothing. Leaving your money in the bank or saying you invested in this or invested in that. Unlikely it's going to give you 100% return in a day or a week or however long, a month, however long it told you to flip that £1,000. I mean, you have to get comfortable and take the wins and take the joys of being able to do that. If you've ever grown an account, I know right now, every single person on this call right now that's been in Unity for more than a minute and done something has, made 10% on their money, 20% on an account. I know you have. I know you've taken an account. Why? Because I know you're doing prop firm challenges. I know you're doing other things. I know you've got certain people got their own money. I know you've done that. You really have to sit back in your chair and realize what an achievement that is. Because your brethren, who's got 5 grand in a bank account, doing nothing, gives him 2% a year, does not know how to take that money and make 5, 10, 20% of it. He doesn't know how. He doesn't even know where to start. He knows how to work, get paid, stack his chips. But you know how to do that, but you now also know how to grow your capital. And this is the whole point about this. It's about understanding that you can grow your capital. Just like if I was teaching you a business of how to take oranges and make orange juice. It's teaching you a trade. It's teaching you something that I cannot take away from you once you learn it. It's yours forever to pass on to your children and your friends and your family members and say, you know what? Don't invest in Tesla right now, because from a technical perspective, it's far too expensive. Why are you saying that? Well, I understand market structure and price action, and I think people are going to be taking profits here where you're buying, and you may see your money go backwards before it goes forwards. That's like you being able to be a doctor or a dentist and saying, based upon these symptoms, I don't think you should drink this because this is going to spike your, sugar levels in your blood and you saving somebody's life. It's the same equivalent. Because your friends that are just saying, "Oh yeah, I'm gonna buy this AI company," they haven't even looked at the chart. They don't even know what a chart is. They're just gonna look at Bitcoin and they're gonna be like, "Oh yeah," like I said when we was analyzing Bitcoin at a time when Bitcoin was on the news. And the general consensus is, guys, if you start hearing about stocks or opportunities on the news, if your mum, no disrespect to anybody's mum, or your grandma or your auntie that don't know nothing about nothing starts telling you about Bitcoin, you're probably too late. And I'm not saying too late forever and ever, amen. Just in that season, in that moment, you're probably too late because you don't want to be late to the party. You want to be part of the Bitcoin's ascent. You wanted to turn around and say that you bought Bitcoin here, yeah? You bought Bitcoin, that you bought Bitcoin, that you bought Bitcoin here, or you bought it here, or you bought it here. You don't want to buy it here. You don't want to buy it here. You don't want to buy it here. Now, I'm not trying to say, yeah, someone says, yeah, but it's still going up. I get it. Of course it is still going up. So if your plan was to put your 10K into here and watch your 10K go to 4K, and then watch your 10K go up here to 14K and then back down to 6, that's fine. You got a long-term strategy, that's fine. I'm not denying that that's possible. But most people don't want to see their 10K go all the way to 4, 3K. Why wouldn't you try and buy it when it was 3K and then watch your money go to 13K? And then when it gets up in here, and you've all heard about the VIX. The VIX is a chart that measures greed and fear. Yeah. Now, at the bottom line is that the saying is when people are fearful, i.e., oh no, Bitcoin's going to hell. That's when you're greedy, and you should be trying to scoop up as much on your plate as possible. I'm trying to write greedy, but it's not coming up. Yeah. And when people are greedy, oh yeah, let's buy Bitcoin. Bitcoin's price going to 1 million. That's when you should be fearful, and you should say, I'm gonna get out. Yeah. Now, from a technical place, there was a point when we was up here and the market's moving up here, and I was like, guys, I hear you. Everyone's talking about Bitcoin. I get it. I wish that I had 1 million Bitcoin right now. However, I don't care what they say to me on Instagram or what they're saying to me on the news. I do not want to buy Bitcoin at the most expensive it's ever been. That was my advice to people when it was on the call saying, yeah, what do you think about Bitcoin? I was like, looks good. 120K is amazing. But I wouldn't be buying it now. That is our understanding of the markets. That isn't me, or better still, going back to my analogy, that is me being able to have some sort of understanding and say, I wouldn't mix that chemical with that chemical, mate, because I know just from a scientific perspective, it's going to cause an explosion. So probably wouldn't do it. It's gonna cause some fumes that are going to be toxic. Probably wouldn't do it. Someone else goes, you don't know what you're talking about. They mix it, they blow up the house, the kids, grandma, everyone gets blown up. And you're like, I did say there's a value in that. Pat yourself on the back when you understand how to look at these charts and go, maybe not now. When you turn around here and you're looking at Bitcoin and you're saying, listen, I'm a bit concerned about Bitcoin breaking this swing level of structure here because it was bullish, making higher highs and higher lows and higher highs and higher lows and higher highs. And we've now had a change of character. This market has indicated by breaking this level, yeah, that it might want to continue doing this. Go on Instagram right now. There's about, I'd say, 60% of people that think that, Bitcoin is going to 1 million. And there's about 40% of people that are going to turn around and say Bitcoin is going to zero. So you can't really flick a coin. You've got to have some sort of knowledge to make your own decisions up. I'm very concerned by the fact that this Bitcoin has broken this level. However, it might just be sweeping liquidity below here. So on a shorter term, as a day trader, I'm safe because I'm going to trade what I see. I'm going to look at smaller structure, not here on the weekly chart. I'm going to look at smaller structure. I'm going to try and steal a living within what this market is doing, which at the moment is making lower lows, lower highs, lower lows, and lower highs. I'm going to try and steal a living. But I'm not trying to make some long-term predictions about Bitcoin because at the moment, Bitcoin has violated some key structure. It's making me question whether or not it's going to zero or not. I don't know. Neither does the guy who's on Instagram who believes he knows everything about everything. He doesn't know either. Yeah? He might pretend and posture like he knows. Oh, yeah, I do this and I do that, and my videos are, shiny. He doesn't know. He's just trying to make some sort of predictions based upon what the markets have done. So, say, for example, we're here. It's very, very possible that Bitcoin could start pushing back up into these levels. Why? Why have I said that Bitcoin might start pushing up? And this is going to show you how the people that pay attention and have been here are going to have some sort of understanding. Oh, 1 second. Saved by the bell. Saved by the bell. I'm going to come back to that question. Let's go and have a look at Dixie and see why my alert's ringing. You see? And that's how I manage my trades. I don't have to sit there and look at Dixie with my mouth open for the whole day. I can set up my little soldiers, my alerts, to stand around and they can look at Dixie all day. And then they can let me know when Dixie does something of interest to me. So look, my Dixie, the dollar index, has just pushed down below a session low. Now, a session low for me is purely a point of interest. This was Asia session low. It's just absolutely exploded through Asia session low and now taking a New York PM session low. Okay. Now, for me, someone's going to say, oh, but look, we missed out on the market pushing down here. Well, coulda, woulda, shoulda, maybe, might have, possibly, you know. But the reality is I can't trade based upon that. I've got to trade based upon the information that the markets give to me. So the information that market gave to me just there is that we've taken Asia session lows here. So I can change this to liquidity taken. And we've also taken a previous New York session low. And what I'm looking for here is some sort of change of character. Now it's happening very quick. Yeah, it whipped down here, spiked down here at 902 for whatever reason. All right. And now we had, and it straight away wanged back up in here, meaning that this was a big red candle and demand came back in the market, said, where are you going? And shoved it back in this direction. Now I cannot just hit the button. I'm not playing Atari. I cannot hit them. I know how tempting it is because you think to yourself, oh, the market's just swept liquidity and now it's spiking in the opposite direction. But that's not enough for us to make a decision. I'm sorry. If there's a guy out here and said to me, yeah, he hit the button down here, right on the tip of this here, yeah, pause, and he hit the button here, I'm gonna say he's just winging it. He's lucky. And he's in some profit at the moment. Unless he knows something I don't know, like someone gave him a phone call and said, at this particular price, you need to enter the markets. It's like, yeah. Now I can see some reasons of why we've reacted from here. Look, if we go to our 15-minute time frame, we might turn around and say, okay, the market tapped into some imbalance. Where's my little square gone? Can't even see it for some reason. Why can't I see it? It's the question. Something's all sitting over it. Here you go. Let's move this over here. Sorry, my tools are just off screen. Like, so, we could turn around and say there was some imbalance in here on the, what time is that? 15-minute time frame. There was some imbalance. We could say on a smaller time frame, there was some more imbalances below, but we did, in hindsight, it's a beautiful thing. We didn't know that, that the market was going to go for that particular imbalance and tap here or anything. We can't, we don't know that information. What we're waiting for is this market to take liquidity from below Asian session, which it has done, and then show us some sort of change of character. Because at the moment, even though we spiked all the way down here, this market is still in line with bearish structure, even on a smaller time frame. It's still made a high, lower low, lower high, lower low, lower high. This wick down here would be a lower low. Still bearish. It might come over here and make a lower high, and then lower low again. I don't know. So we need some sort of milestones before we start making decisions. We can't FOMO into it. Can't be like, oh, look at this spike in this. No, who cares? Remember as well, we're not trading Dixie. We're using Dixie as a resource, but ultimately we'll be looking to see. So let's see whether we've seen the same reaction spike that happened in our GU or our EU. Let's have a look. Let's have a go over here, and I'm going to let's hit EU. And let's come out of this. Let's go to our candles. Let's wipe this chart clean. Let's go and have a look on a smaller time frame. It's a minute time frame. Let's hit refresh. So look, we saw our Dixie spike down. Yeah, and what did we say about spike the U? We compared it to weight. So if the Dixie lost weight, got lighter on the scale, well then that means that U would go up and that GU would go down, the G side would go down, and boom, it would be bullish. And we can see that in that bullish spike, it took Asian session highs, which is this red box. It took a New York PM session high. And here is our New York AM session, which it hasn't taken yet. So I'll keep it as saying liquidity. The other ones should be saying liquidity taken. And this one would say liquidity taken. And I'm still here trying to work out and gather what I think the market is going to do. Yeah, we had a bit of volatility coming from nowhere. Maybe that was, I don't know, some sort of news. We didn't see any real news. So who knows where that little spike just came from? Maybe it's pure manipulation from some big institutions that just want to clear out the people who had stop losses above Asian session, the stop losses, maybe. I don't know. But I don't care because my money's in my pocket. I'm not rushing. I'm far too long in the tooth to get excited and start rushing into markets based upon me seeing a spike. Who cares? There's no change of character. This market still be making higher highs and higher lows. So if I want to get in for the sell, for argument's sake, it hasn't changed character. And if I want to get in for a buy, where do I get in for a buy? What is my premise of saying I want to buy this market? Oh, well, there's lots of volume coming in and it's looking like it wants to be bullish. Okay, cool. So where do I put my stop loss? If we're going to get in for a buy then, because we just want to trade the continuation, where do we put our stop loss? I don't know. I'm not interested in buying this market after it's been raging. I've been telling you that. I don't want to do that. I want to be part of the movement of where it wants to go. Now, if this market just continues going up and up and up and up and up for the whole day, well, then cool, I missed it. I didn't take any trade. I missed it. And I kept my 100 grand account as 100 grand. Not end of the world. Yeah? Not end of the world. Going back to Bitcoin, I was asking somebody, I said, why might, I'm not saying for definite, I'm saying why might Bitcoin make a retracement back up to this particular level in here? Why might it? Does anybody know? Does anybody know why it might make a retracement back to that green line? Or around that green line? Obviously nothing's up to a line in the charts and markets. Yeah, everything's to an area. But why might it come back towards this type of area in here? Does anybody know? I'm gonna give it a little stab in the dark. Anybody? Anybody? Look, we understand that these markets like to move in waves, okay? And we can see that Bitcoin had a big impulse. I know that everybody knows they was just scrabbling to unmute themselves. I know, don't worry about it. Yeah. And we know that this market's made a big bearish impulse, but we know markets like to retrace, and a point of interest of retracements for us is 50% of impulse. So this is the impulse. 50% level is a point of interest. Now, can the markets, drop off from earlier than that or retrace higher than that? Yes, they can. But we have points of interest, just like you cross the road at a certain point, right? You don't just like cross the road at a bend or jump over the railings and try and cross the roads or whatever. You kind of cross at the crossing, right? This is a point of interest. It's a point that we'd be looking at that maybe the market could retrace back to. We can look at, different impulses And, depending on where you're counting the imports from, you know, like I said to you, there is nothing set in stone when it comes to these markets. They're all points of interest. Yeah. So let's imagine I've just pulled out some points of interest. Let me show you what I pulled out. This impulse, or this being the top of the impulse, or this being the top of the impulse. Okay. So that 50% area, which was these green lines, become points of interest. So when the market comes up here and starts to do something, showing me a change of character, I pay extra special attention. And I can see the manipulation M sitting in here. I can actually see it from a mile off. Yeah, it's actually sitting in here. The manipulation M here is sitting right in there. And the market comes back, taps in, and closes back below that level here. The manipulation M is here, in there. And what do I do? If I was trading it on the hour time frame, I simply execute on my strategy. Now, I could execute on this strategy here of the market making a manipulation M, indicated correcting and continuing, and then the market could do this and stop me out. Could do. But that's out of my hands. That's not something that I can control. That's something that I accept as a trader that I might get punched in the face. If you're a boxer and you haven't accepted that you might get punched in the face, there was a fight this weekend, Deontay Wilder against Derek Chisora. Yeah. Two uncles just swinging their hands, yeah, for 12 rounds. However, despite however much training that they do or however good or bad they think they are at boxing, you know, Chisora is UK legend. Yeah, you gotta love Derek Chisora. But the bottom line is they accept they're gonna get punched in the mouth. Whoever you think is the best boxer, from your Muhammad Ali's to your Floyd Mayweather's to your Roy Jones Jr.'s to your Mike Tyson's, they get in the ring and they accept that they're gonna take a punch or two. So if this happens and the market goes up there and stops me out and I lose, well, that's my punch in the face. I'm a boxer. I'm a trader. And that's exactly why we turn around and we only risk 1% at a time. Because once I've risked this 1% and then it actually starts going my way, I can add to my position. Let me add another 1% and make the first position risk-free. Let me add another 1% as the market continues to break structure. Before you know it, I've got 4 or 5, 6 trades in here all running in this direction, but I only ever risked 1%. That's how you trade. That's when you turn and you go, I'm a bad boy trader. Because I went and I made 20% on my account, but I only ever risked 1% at any given time. That's how you trade. Because these markets can do what the hell they want to do. That's why gold ringing as well. So let's have a quick look at Dixie, and we'll have a quick glimpse at gold as well. All right, so let's look at Dixie, see what happened after that spike. Look. It's all the way down here, and somebody's thinking to themselves, oh yeah, look at the wick rejection. That's what the guy's going to tell you on Instagram. Oh yeah, wick rejection. We've seen wick rejection here and blah, blah, blah. Okay, so what's going on now then? If you saw wick rejection, it's still melting off. It's still melting. Someone's saying, yeah, but we could have been in here for the salt. We could have, would have, should have, maybe. Maybe you could have been taller. Maybe you could have been smarter. Maybe you could have had longer hair or been more handsome. You're not. Right, just deal with it. We need to wait for some sort of confirmation. See now these markets come down here and tapped into this now. Have a look from a structural perspective. We can see that there's a potential, structure being built here and a potential little W here. That's how we see structure, W's and M's. Maybe that market now, after this big spike, actually wanted to tap down into this imbalance, and now it's going to make a beautiful manipulation W, which shows a change of character. What do I mean by that? I mean that the market was previously making lower lows and lower highs and lower lows and lower highs and lower lows, and then maybe, boom, it does that, which is a change of character, which is now a higher high. And then maybe it corrects, makes a higher low, and then maybe it continues and makes a higher high. That is a change of character. It was once doing one thing, and now it's doing a different thing. That's what we look for. But we don't know when that's going to occur, so we must be patient and wait. Maybe it happens now and it makes a lovely change of character. Maybe it makes that change of character on a 3 minute time frame, opposed to it being on a 1 minute time frame. But either way, we have to have some sort of rules for us to get into these markets. You have to slow everything down. Even if you're trading, what you should do, let me give you a hack. You ready for the hack? Go and get your own little space in your office or in your room or in a corner. And when you trade, talk to yourself, just like I'm talking right now. Say, yep, I've seen the manipulation W or the potential start of the W, and I'm waiting for the, you know why? Because when you say it out loud, your brain can't ignore it. You said it out loud now, and it's been heard. You can't, if you go against that, it's like you're really mugging yourself. If you say, second guys, if you say that you're waiting for this to happen, you can't press the button before you can't press the button before that happens. Sorry guys, my kids are here, it's still bank holiday. They're going to football camp this week, so they're just getting rounded up for that. But I'm saying you can't do something before you've said it out loud that you're waiting for this to happen. If you do, you're really mugging yourself. So we've already said we're waiting for a change of character. That's it. I can't do nothing until I get a change of character. I don't care what spikes happen. I don't care. And then I'm going to look at my EU or my GU, and I'm going to say, is there an opportunity? Is this making that manipulation pattern that I need to see? Am I concerned by this liquidity that still sits over here? Look at it on the EU. This liquidity here, which is a New York AM session high, has not been taken. And I understand that liquidity is a magnet to price. Wherever liquidity is, price is drawn there. So if I can see that price has gone somewhere and hasn't quite taken the liquidity, this here, New York PM session high is also a daily high. So I'm very concerned. Have a look. Look what I'm going to do over here. I'm very concerned that maybe this market wants to push up and take this high here. I'm concerned about it. Yeah. So even though I'm looking at thinking to myself, maybe my manipulation M is coming right now, I'm concerned that why this market hasn't taken this high yet, if I know that it's a magnet to price. So this makes me hesitant to just jump in right now. I will still trade what I see, because sometimes, have a look on the dailies, sometimes the market comes up all the way up to here. Actually, we can't use this as an example because we don't know if it took the liquidity from below first. All right, we'll have to see the journey of the candle, but just assume sometimes this candle can come all the way up to a high and not decide to take it and decide to turn around. Sometimes that does happen. Yeah. Sometimes it does happen. So therefore, I still trade what I see when I see the confirmations, especially if they're on a high enough time frame. But I'm letting you know for free that based upon my understanding of the markets liking to being drawn to liquidity, I'm concerned about this little line over here. Yeah. Of why the market, or is the market going to come and take this level? When it does take this level and I've seen a beautiful break of structure, then I'm happy. When it does that, I'm like, okay, it's done what it does. It's nature. And then I see this, and then I see this. I'm a happier bunny. Does it have to happen? No. Do I have to get involved in the charts? No. One second, guys. So this is what we're looking at the moment. I am looking at here that we've seen this market push up here, but I'm concerned about this level here, and I can use my source of truth, which is the Dixie. And that Dixie over here, I'm looking at, and that concern, that daily low on Dixie is all the way quay down here. Remember, I take the Dixie first as my stronger source of making my decisions. EU don't mean Jack. EU is just a smaller little cousin, a little nephew. Let's go and have a look at GU, whether GU is doing anything slightly different. So that's the EU there. Let's look at GU. So GU, we can also see that same spike that happened in London and the market pushing back up. If we scoot all the way out to our daily time frame, let's try and identify there where we can see our daily high. Why? Because the daily high is a point of liquidity where the market pushed all the way up and stopped at this point here as a previous daily high, and that's the previous daily low over here. For me, guys, my colors of my lines tell me everything. Because obviously I've got you guys on a session and you might not be familiar with my lines, I always will come in here, and so we put it on here so you can see it saying daily high, you can see it saying daily low. But after a while, these colors and certain lines will mean certain things to you. But look, I'm looking at GU, and once again, I'm very concerned that the market has pushed all the way. Remember, the market opened up down here at whatever time, 12:01, and has pushed all the way up. We're being drawn by this magnet. Why should it turn around before taking the high? That's all. I'm asking myself. Why would it turn around before taking a high? So I know what you're saying. You say, okay, so why don't we trade it bullishly towards that high? Possible. We could trade it bullishly towards that high if we saw within our rules a reason for us to get in that trade. For example, here's the reason. I'll show you a reason for this one in particular. You ready? Is someone going to explain what I'm going to say? So I'm going to take the words out of my mouth. Can anybody explain how I'm going to say that there might be a potential reason of why we got into this trade? Let's see any of my Unity soldiers can understand what I'm going to say here and why. Anybody know? Anybody know? Anybody want to unmute themselves and put themselves out there? Anybody? I know you're all rushing to tell me at once. I know. Well, look, in a Unity strategy, I have a problem with the markets leaking out early before London Open. Yeah, I have a problem with that. Whenever I see that, I think the markets are going to violate those highs. I then have a point of interest that I look at, which is 50% of the Asian session. Yeah. And at that point, when the market comes to 50% of the Asian session, I look for what I look for to see if I can find a way in. Have a look at my way in. The market came down here, right to our 50%, and made a very ugly manipulation W. Manipulation because we can see this wick here, and this market do this. And that was our manipulation W. And this was our deep correction to here, but to where? To the middle of our W. And then we had our continuation. And this candle here coulda, woulda, shoulda, given us an entry with our stop below the last low. And we would have been part of that spike all the way up to here for a 1 to 4. And we'd be a part of this movement at the moment, currently at 1 to 3.5. That would have given me a reason to get in here on the basis that the market was going to come and violate these highs. That's based upon our rules. Now, I wasn't looking at GU like that. I was looking at Dixie, and I didn't get in here. Okay, I'm cool with that. I still take half a point because I can see how I may have gotten in here as part of this London push towards where, in my opinion, towards the liquidity, which is here. So, yeah, I didn't get on the elevator going up, but there is still an opportunity that I could either get in the elevator if this market makes a retracement and then shows me again a break of structure towards that liquidity, then maybe. If that market right now decided to come all the way down here to maybe 50% of this impulse, for argument's sake, from here to here, and it decided to retrace all the way back down into here and then make another little break of structure and then push up like this, maybe if I'm hungry, I could get in here, trading it towards where? Or towards the liquidity high. Maybe. Or maybe it doesn't do that, and maybe I simply wait for the market to take that liquidity and show me a change of character up here. Either way, slow breaths, calm trading. methodical, understanding what the plan is. That's how we trade. That's how you should trade. And I'm telling you, I know from experience, when you're trading by yourself in your home, in your underpants, and you're thinking about the new Porsche that you're gonna buy, and the house that you've seen on Instagram with the revolving living room that spins around and turns into a gym, and you can drive your car straight into the front room. I know that house. When you're thinking about that all by yourself, sometimes these rules, this calm, slow breathing, this being able to trade the markets in this manner becomes scattered. It becomes frantic. It becomes I'm clicking the button and I don't even know why I clicked the button. I know because you guys have told me. I know because I've experienced it. Go on. Someone's going to say
Jake,
something.
that was me, man. Your charts are just blurry, fam.
Is it? Are they going a bit blurry? Maybe it's my connection. Let's see if they're gonna come back into play. Give me a second. Let me try and restart this share. Has it come back yet, or is it still blurry?
Still blurry.
Is that for everybody, or that could just be for you and you might be playing hopping on
No,
with someone else?
I'm at work, my G.
You saying, does that mean your Wi-Fi is strong? Yeah. Is anybody else getting blurry charts?
Connection struck.
Is anybody else got blurry charts? Unmute yourself. Let me know, or send me a chat. Send me a message. Does anybody else get blurry charts? Right, let me try and take your word for it.
It was a little bit blurry for me as well.
All right, let
Can't
me
see it that clear.
let me go back and try and see. It might be my connection. I might have to allow Darren. I was just gonna start cussing him, saying it was his fault. But let's see. Maybe it's me. Let's see. Maybe we can come back here. Give me a second, and I'll be able to tell you. Let me
That's
join.
better.
Is that better now? Yeah. Let me try and
Yeah,
join. Let me get involved also. Sign into the platform. Make sure that we're getting good connection. I don't have the best connection, to be fair. Um, but let's check it. But yeah, so that's what I want from you guys. As much as I know we want action-packed sessions where we're taking trades and we're playing music, we're playing Salt and Pepper Push It and Rick Ross, push it to the limit and all these kind of things. Certain times we need to slow it down, learn how to breathe slowly and act like grown-ups. You've heard, or you may have heard, seasoned traders saying trading should be boring. Yeah, it should be boring. Shouldn't be this like euphoria, with extreme highs and extreme lows. That's not sustainable. You have a heart attack. It should be boring. It should be, I'm waiting for this, I'm waiting for that. If this happens, I'm going to do this. If that happens, I'm going to do that. If neither of them happen, I'm not going to do anything. And you could not do anything for days. And then when you see what you support, like for example here, look, I've seen a little bit of a manipulation M on GU, but to be fair, I'm still very concerned about up here. And I'm waiting for a correction and a continuation. I don't have to take my gun out my holster yet. I don't need to get excited. Yeah, I know you're gonna do that, but we've been on the call for a whole hour. Well, that is what it is. The markets don't react to the fact that you've been in front of your charts for an hour. They're like, you know what? True Sister Banner's been here for an hour. Let's just give her a trade now, just before she loses interest. It doesn't work like that. It works that you have to be a sniper in the bushes and wait for your opportunity. And then you're able to grow your wealth by your own hand according to the size of your account. And that's how it works. And when you want to make big money, you want to actually every day you want to make Ferrari money. All that has to happen is very simple. You ready for it? Let me tell you. Let me give you the secret of how you make Ferrari money every day. How much is a Ferrari? Let's just say 350K. Yeah, maybe more, depending on which one you're looking at. If you're looking at the Parasangue, yeah, you're looking at something else. I don't know. All you got to do is have a much bigger account. Maybe like this. Yeah, maybe like this. That's what you got to do. Now, how you get that money, that's your own business. Whether you get investors in here, whether you have this money sitting in your bank account or under your bed, whether or not you grow this money from having £1,000 account, whether or not you join a business, a company, and they are able to sponsor you and say, no problem, you can trade the company funds. We've got 10 billion in an account or whatever it may be. And they're going to pay you a percentage of whatever money you make in profits. I don't know. But that's how you do it. And every single day you can say, oh, I took a trade today. I risked 1%. And that 1%, generated me X. And I was able to buy a Ferrari every single day for a week. That's how you do it. There you go. That's the secret. How do you make Rolex money every single day? You just have a bigger account. Nothing to do with changing your strategy. Nothing to do with taking more risks. Nothing to do with hitting more trades. Nothing to do with let's use another strategy that we've just seen on Instagram because this guy, he seems to be using it and he looks like he's making money. Nothing to do with anything about that. It's you stick to your strategy that you know and understand and you love, that makes sense, and you have a larger account. And if you can't just put that money in one go, which is probably not best anyway, then you grow your account over time and you have a plan of growing your account from 1,000 to 2,000, 2 to 4, 4 to 8, 8 to 16, 16 to 32, 32 to 64, 64 to 6 figures. And then you maybe go and approach somebody and say, look, I took my money and I grew my account from 1,000 to 10,000. Can you put some more money behind me, uncle? Because I know you got bread. And he looks at your numbers and go, you know what? I like this. I like the fact that you never took more than 1% risk at any one time. And I tell you what I'm going to do. I'm going to put 100 grand into you because I've got 100 grand to spare. Now you've got a 6-figure account. And then you keep that. That's it. That's the plan. There you go. I've given you the plan. The plan to paradise. That's it. It's easier said than done. And you must pay your dues of doing your homework first and doing your exams first. That's what must happen. And that's what we do over here in the mornings. And that's what I try to drill into you. The strategy itself, and let me say something. All strategies are learnable within a day, within hours, depending on your capacity to take in information. All strategies, not this strategy, all strategies. There's no strategy that's like, yeah, it's going to take you 6 months to learn this strategy. No. You can learn this strategy, the maths of it, in a day, in a few hours. Now, whether or not you understand it, it's like this. I can teach you that boxing is about punching, jabbing, left, there's a cross, there's a jab, and foot movement. That's what boxing is about. Keep your hands up. That doesn't make you a great boxer because you know the maths of it. That you're going to have to throw jabs and have footwork and don't get hit, keep your hands up. You've never been in a ring and fought with another grown man throwing punches at you for 3 minutes. By the 4th minute, you're knackered. Based upon adrenaline, based upon you're doing too much, based upon he's been punching you in your stomach. So see how easy it is to keep your hands up then. When I've been saying to you, when you know that you've got to keep your hands up, see how easy it is for you to keep your hands up after a grown 14-stone man has been punching you in the stomach for 3 minutes. That's the exact analogy with trading. You know what you're supposed to do, but you have to go through the experience of trading every morning or every day, learning the charts, learning how not to react to emotions, learning how to deal with getting punched in the face, that you don't, revenge trade, etc. And then you start winning belts. And then you start getting the accolades that you deserve. Not before. Not because you just said you want to be a boxer today, because you need the money and you want to make Mayweather money, that it's just going to happen. Unfortunately, it doesn't work like that. Have a look. This is us sitting around here and waiting and understanding Wagwan. Even after our spike, even after the market started coming back down here, even after the market looked like maybe it was making a manipulation pattern here, we're still doing some stuff over here. This is what I want from all of you guys. I'd prefer you guys tell me you didn't take a trade for 2, 3, 4 days, and then you took one good trade that made you a 1 to 5. That's the person I'll give my money to. Not a person who took 30 trades today, they was up 4%, but they ended the day blowing their account or losing 3%. Or they was up 50% today, and then they ended the day 10% down. I don't want that person in my camp. They are a liability. Do not be a liability. That is going to be the word for the week, guys. Do not be a liability. Any questions before we finish up? We did run on a little bit. Any questions before we finish up about anything,
I discovered something about like valuing businesses, not businesses or stocks, should I say?
Let's go.
Have you heard of the term PEG ratio?
Yeah.
Yeah. What's your thoughts
or
on
you talking about PE ratio?
PEG ratio? Yeah.
Let's have a look. Let's go to ChatGPT and let's ask about. So it's one element of how you value a stock, but it's definitely something that you can overstand. But tell me your understanding of PEG ratio before we read out what chat has to say about it.
My understanding of PEG ratio is there's a scale of three things, whether a stock is like good to buy, if it's at a good price, if it's at a decent price, or if it's at an expensive price. So my understanding is if the PEG ratio was in between 0.5 and 1, that's a very good price. If the PEG ratio is between 1 and like 1.99, then that's sort of a decent price. And if it's anything over 2, then it's not a good price at all.
Excellent. And that is definitely something that when you're looking at your stops, you can start to understand what things to look for. Just like we are looking for our confluences before we take a trade, it's exactly the same. If we turn around and say we want to start valuing stocks, let's read this out in regards to PEG ratio.
PEG ratio equals price/earnings to growth ratio. It helps you judge whether a stock's valuation looks expensive or cheap relative to its expected earnings growth. Formula: PEG equals P.
Yeah, so PE ratio divided by the earnings growth rate. Okay. Exactly what you said so far, helping to evaluate whether a stock looks expensive or cheap based upon its growth.
PE ratio divided by earnings growth rate. Example: PE equals 20. Expected earnings growth equals 10%. PEG equals 20 divided by 10 is equal to 2. How to read it? Below one stock may be undervalued relative to growth. Around one stock may be fairly valued. Above one stock may be expensive relative to growth.
So exactly spot on of what, Jay said, yeah, which is excellent. And it's quite an easy way to work it out based upon the PE ratio and earnings, expected earnings to growth. So let me close this. Let's go on.
PEG ratio.
Oops, 1 second.
Thought for a few seconds. Important points. It is only as good as the growth estimate. It works better for growth companies than slow or unstable businesses. Negative earnings or unreliable forecasts can make it useless. Quick example. Company AP/E30, growth 30% PEG 1. Company BP/E15, growth 5% PEG 3. Even though Company B has a lower PE, it may actually be more expensive relative to growth. For a rough stock check, use PE for valuation, PEG for valuation versus growth, debt, cash flow, revenue and earnings trend.
And so that's what I mean by it's one element of how you can evaluate stock. There's also other stuff in regards to, like he says, debt, cash flow, revenue and earnings, etc. And there's probably other factors as well, company, the age of the company, how long it's been around, etc. You know, who's behind the company, etc. But definitely PG is a sick one for you to start doing research into and understanding. So yeah, very, very sick. Because ultimately, guys, you know, us being able to learn and understand and grow these skills means that we can trade all things and we can invest in all things, stocks, commodities, futures, you know, whatever it may be, crypto, because we understand the markets, we understand sentiment, we understand to read the charts. And if we can combine that in stocks with added resources of being able to value a company, being able to say, wait a minute, this company's massively undervalued. Bearing in mind, we want to buy things we know when they're undervalued. Yeah, we want to sell when they're overpriced. Yeah, then this would definitely help us. But yeah, very, very sick, Jay, and keep it up so that we can go and we can do more sessions and focus on like from our stock perspective. So we can start looking at our portfolios, yeah, our investment portfolios, and looking at what stocks are good for us to invest in. And remember, guys, yes, we want to make some money first so we can make some major moves in investing in stocks. However, there's nothing to stop you from getting into the habit, like a demo account, of investing. That means opening your investment account from now, and no matter what P you've got, go and invest a little £50 in every month. Is that going to make you rich? No. More than likely, no. However, it's going to get you into the habit of understanding how to buy a company. You maybe never done it before. Bought a company, bought a little slice of it, seeing your investments go over time. Is your £50 going to turn into 5 million? Probably not. However, when you do get into money, or as you have got into the habit, every time you make a money every single month, you're going to invest some. You're going to invest some. Why? Because you're in the habit of doing so. Just like I'm in the habit of waking up every morning and doing the breakfast club. I don't care who's here. I'm here. I'm in the habit of doing it. Just like you're in the habit of waking up and brushing your teeth. You're in the habit of maybe going to the gym. You're in the habit of maybe doing something. We're creatures of habit. Investment, unfortunately, should have been a habit that we were taught by our parents, that from doing it from a young age. Other cultures do. Other cultures, investment's part of their religion, part of their upbringing, something that they were taught. I'm telling you guys for free, with without, not to say without embarrassment, but I'll be open and say that the word investment, I probably never heard it in my household growing up. Never. Like probably never. Like probably maybe never. There's other words that I heard, but investment wasn't one of them. So when my money came in, do you know what I did? Does anybody know what I did when my money came in my journey as a teen, as a young man, as an adult?
Bought clothes or a big chain?
Bought clothes, big chains, watches, cars. Because I thought this is what you're supposed to do when money comes in. You're supposed to buy the trappings of money. That's what I did. So this is why what we're doing here is so priceless. I say it all the time, but it's very, very important. Yeah, have a look at our GU, the same one we was waiting for confirmation. Yeah, this is why we wait. This is why we're patient. Now we can see the daily high has really been taken. Let's go and look at our Dixie. Yeah, we can see our Dixie all the way pushing down here. Still concerned, I am. I'm still concerned about Dixie because down here is the previous daily low. Yeah, and the market's kind of been consolidating around here. All right, let me wipe the charts real quick. No, actually, I can't wipe the charts, but let me clean it up a little bit. We're in this little imbalanced space at the moment, but the way that Dixie's been consolidating, kind of gathering orders, I'm not concerned. I like the fact that we'll be gathering orders here, because what we might do is we might do what? What am I going to say? What might we do that might give us an indication that the Dixie might start gaining some strength? What might it do first? Anybody know what it might do out of that accumulation first?
Manipulate.
Yeah, it might manipulate. And if it manipulates out of here like that and takes these lows, it will be a great sign for us to say, okay, maybe the Dixie's going to gain some strength and give us our sell in our EU or our GU. Now, if it doesn't do that and it just keeps melting off, guys, maybe we're just going to miss that opportunity today, Tuesday, back after bank holiday, and the market's doing something else. Just know that that's not bad. It's not a problem. It doesn't make you a waste man if you didn't take any trade today. It doesn't make you, oh, look, you took no trades today, you're an idiot. It just is what it is. Yeah, maybe this market today wants to push down and get into this little bit of imbalance first. which is below our daily low here. Below this little, oops, let me lock this so it doesn't move. Yeah, below that little, below this little imbalance in here. Maybe it wants to tap into here and then start rising up. Who knows? Who knows? But I know that you will wait patiently for your indication. Yeah, we can all sit here and be like, oh, look how much this market's run down here. Well, look, we saw the GU potential entry. If you didn't get in it already, you missed it. Potentially, if we was looking at GU, I told you there was a potential, or was it EU, one of them, GU, EU, the same difference. There was a potential entry there, but I'm not in it. If I was in it, I'll tell you. I'm not in it. Could have been in it, from down here. Yeah, I think it was GU or EU. Could have been. Could have, would have, should have, maybe, might have. Yeah, but I'm not. Do I care? No. I don't care. There will be another opportunity. Trust me. I know that for facts. That there will be another opportunity, and then I'll take my opportunities. Guys, have an amazing, amazing day. We have run on. We should have finished about 25 minutes ago. But I wanted to stress that point for anybody who's just, I know people have called me, they're funding their own live account, putting real funds in there. Yeah. There are people that are, doing well in their prop firm challenges, people that have blown accounts recently. And all I want to turn around and be able to say to them is this, is just understand that you have to fight that urge in you to want everything now. And it's a human urge, yeah, to want it right now. Yeah. Once you get past that and say, you know what, I can get it later. As soon as you do that, your trading will change. When you don't want it, that's what they say. Yeah. When you're not looking for no gal, that's when they'll all start phoning your phone. When you don't need a boss, that's when you see 4 of them sitting down there waiting for you. When you're not clucking to hit the button, that's when you're going to do your best trading. I'm telling you. Remember I said it. When you're not clucking for it, that's why when demo accounts, people grow demo accounts fast. Because they just like demo accounts, they relax with it. Especially if they stick to their rules, they relax. There's no emotional energy. And all of a sudden they grew their demo account, 40%, 50%. Soon as they transfer over to their live account, headache. Yeah, because ultimately there's emotions, there's all of these things that are tied up with your live funds. Yeah, guys, have an amazing, amazing day. I will put something on quickly here in our live room, but obviously you guys have the ability to go and look at whatever live videos you want, have a little play around. I'm gonna play this. I'm gonna play this here, which is a different video. It's about investing, it seems. It says I started investing at 44. Now my returns beat my salary. So look, there you go. Showing you that, it's never too late. All right, I'm gonna play this and I'm gonna wish you guys have a great day today.
Love and blessings.
Love, guys.
I was always